outside of the two partners. We use them by sending a cheque, a standing order, a direct debit or debit card, etc. Various mechanisms there are to instruct the bank to pay money from your account. And we'll look at a couple of examples. Firstly, where you're paying a customer of the same bank. For example, this Alan Atkins is writing a cheque to instruct his bank to pay £5 to Dave Dixon, who also banks with the Co-op Bank. Secondly, when he's trying to pay a customer of a different bank, Carol Clark, who banks with HSBC. So let's look at how that works. The first case, that it all happens within the Co-op Bank system. Two people who have current accounts with them, and let's say they've each got £100 in the current account, which means, in effect, there's an IOU to each of them from the Co-op Bank for £100. Alan writes a cheque to Dave for £5, and that's easy for the bank to sort out. All they need to do is reduce the amount they owe Alan by £5 and increase the amount they owe Dave by £5. And the bank is quite happy to do that. It's neither lost nor gained, as it still owes the same total amount of money, but it's fulfilled the purpose of making Dave £5 better off and Alan £5 worse off, as was intended. So you may be able to begin to see why there's this debate about whether it really is money or not. It's as if money is almost a misnomer. What we've really got is a series of debts being transferred. If you use the expression paying money from my account, it almost brings you back to the child's picture and can tend to perpetuate the myth that banks have got something hidden away in their vaults. So if you're analysing what's really happening, you've got to be very careful about blithely using the word money when it's really all to do with IOUs. Now let's go on to the second case where you're paying a customer of a different bank. So we've got Alan with the Co-op and Carol with HSBC, each with £100, so an IOU from their bank for £100, and Alan writes a cheque to Carol saying pay Carol £5. Now, how's this going to work? What we want to happen is Alan's account again to go down to £95 and Carol's to go up to £105. But that's no good as it stands, because if that happened, the Co-op would be £5 better off as a result of the transaction, and HSBC would be £5 worse off. So something's got to happen whereby the Co-op Bank's going to remunerate HSBC to the tune of £5 to persuade them to carry that out. So what sort of money is transferred from the Co-op to HSBC to sort this out? Well, of course, we know that it goes through what's called the clearing system, or most people may have heard of that. But how does that work? What do banks use to pay other banks? Is it coins? Well, no, of course, that would be ridiculous to have lorry loads of coins driving between head offices of the various banks. And it would be almost as silly to do it with notes. What about current account money? Well, it doesn't do it that way either, because current accounts, as I've said, are IOUs from each individual bank. So they'd all be stacking up piles of IOUs from each other with no common currency to clear them. They'd just be stacking up bills, and some will cancel out and others won't. What actually happens is, this is where the fourth type of money comes in that is less familiar. The reserve balances, the purple money. And as the picture shows, this is yet another form of IOU. And this time it's an IOU from the Bank of England to each high street bank. And BOE, I'm just using as an abbreviation for Bank of England. So a reserve account might say the Bank of England owes HSBC £10 million, and that expression reserve account is the name of the account that it's held in. Each high street bank has a reserve account at the Bank of England, and that's the kind of money that's used for all interbank payments, the clearing system, and also other things like if banks are lending to other banks or repaying loans. It's all done in that purple money. So let's do a similar picture for this transaction. This is all within the Bank of England, and we've got reserve accounts for the different banks. Let's say that the Co-op Bank has £10 million in its reserve account, and the Bank of England has £10 million. And now let's say that in any particular day, Co-op customers are paying HSBC customers lots of money by different means, and vice versa. And a lot of them will cancel out, but at the end of the day, one of the banks will owe the other a certain amount. So say the net difference of the payments from Co-op to HSBC is £500,000. Then that's resolved through the clearing system by the Co-op account at the Bank of England being lowered by £500,000, and the HSBC one being raised by £500,000. And that completes the cycle, that completes the picture. From the bank's point of view, you could perhaps almost say that the purple money is the real money. That's the money that they trade in and they're judged on. That's the account that they've got to make sure never goes into the red, the same way as for the rest of us. The real money for us is the blue money, the IOUs from our own bank, and that's what we've got to try to avoid as much as possible going into the red. So as has been mentioned, we've really got a two-tier money system. The commercial banks bank with the Bank of England, and transactions between them takes place in that purple money, the reserve account money. And everybody else, all the rest of us, both private individuals and organisations, have accounts with the banks in those different shades of blue. When I was first trying to work out what was going on, one of the first clues I got was from a book by James Robertson, one of the people who's receiving an award this afternoon, and Joseph Huber, Creating New Money. And they say that the two-tier banking system comes with a twofold circulation of money. One being the public circulation of sight deposits, which is a technical term meaning the current account type money. So I've put that in blue. And the other being the interbank circulation of operational reserves. That's our purple money. There is some interaction between the two circuits. Nevertheless, there is no exchange of units between the two circuits. They don't mingle with one another at all. So that's one of the first things that gave me a clue about this two-tier system and the two types of money that can't be exchanged. And later I realised that the reason they can't be exchanged is they're actually different things. One is an IOU from the Bank of England, where the other is an IOU from a commercial bank. And it's like chalk and cheese. You can't swap one for the other, at least not directly. So you may now be seeing more of why it's sometimes referred to as the system we've got as a debt-based money system, because nearly everything we call money is really an IOU or a debt. And all these IOUs can never really be paid with anything except more IOUs. The whole system is debt-based, except perhaps the coins. Now, I'm just going to go through one or two terms now. The money supply is one of the forms of what's called broad money, which comprises, it's the money in current accounts plus the notes and coins that are in circulation outside the banks. You don't need to work, I won't try to explain why it's the notes and coins outside the banks, but if you think about it very hard and scratch your head a lot, the light may dawn as to why that makes it into a sensible definition. And that's also known often as M4, and that amounts to somewhere in the region of £2 trillion in the United Kingdom at the moment. another key statistic, base money, which can be called narrow money, which is basically the bank's reserve balances at the Bank of England, our purple money, together with notes and coins outside the Bank of England. Just to go back to the current account money, I've said etc. because there are one or two other things that are counted in there as well. And that is known as M0, but the Bank of England seems to have stopped using the term M0 because of certain changes that happened a few years ago. It's now somewhere around 200 billion, I think, about 60 billion notes and coins and the rest in the reserve balances. It used to be much smaller in the reserve balances, but the system changed a few years ago, and then with quantitative easing, that's increased that amount of money. Just a couple more terms. Notes and coins obviously grouped together using the term cash. And the current account money and reserve balances, you could use terms like non-cash money or digital money or electronic money, because it's all held in computers. Although, of course, this didn't arise with the advent of computers. This was sort of money existed long before with ledgers in banks having